Everybody, welcome. So today we're analyzing the Euro OD, guys. The Euro OD because of it's one of the pairs that I actually like trading. But it's not one of my favorite pairs. It's just one of the other pairs that I like analyzing and looking after. And because of it, it falls under the Euro pairs that I actually look after or look at and look at the movements. As you can see, guys, if we can just delve into the chart and just spot things that are normally just the basic of trading forex pairs, right? We all know that the first thing that we have to look for the structure of the market, right? Somewhere here where I'm pointing, let me point using the grid. So somewhere here where I'm pointing, you could see here that this was a spike, and that created a high. I think this was because of price inflation, all the COVID things, because of this is somewhere between 2020. This was in the midst of COVID-19, right? So we don't really take that, even if you were to start a trend or a channel, right? But you don't want to come to this area and really now notice, and spot it, right? It's the highest point that the pair has reached, or the market has reached, or the euro has reached in comparison to the dollar, right? But it's because of prices were so impacted by COVID-19, and everything dropped, and price were just moving, in a very inconsistent way, that you have this spike, and you have this spike also, like you have the rejection of price just coming through massively. If you can look at the rejection is like so huge, guys. Like the rejection is so huge. It's like 1428.3 pips. That's the rejection alone. Right. So if you were trading and the market did spike up and you didn't close, the drawdown did kind of suck some of your profits, right? But I don't know who was trading this pair at this time. So let's delve in deeper into the weekly channel, guys. As you could see that the market has had a tendency to become very bullish. If you can see the market here from 2017 up to 2020, the market was bullish, right? I want you guys to note that the market was bullish. No. Okay. There it is. There we go. There we go. There we go. No, guys, it's not happening. What's happening? What's happening? What's happening? Okay, let me use this one. Uh, okay. So let's use this arrow. Okay. I don't know what's happening, but you can see here that from 2017 up to 2020, the market has had a tendency. The market has been structurally towards the bulls, right? So the market was buying from 2017 up to 2020. So prior to 2017, you can see that the market was very bearish, but somewhere it became bullish. But this is like a rejection between November 2015 and somewhere in February 20. So the market did correct from November up to February in 2016. From that, the market became very bearish. You can see that this is a downtrend, the market creating lower lows, lower highs, lower lows, lower high, lower low, lower high, lower high. You have another lower low here. The market then it reached its lowest low point, right? Then you have a reverse, you have a reverse market. The market comes back to retest the structure here. The market comes back, it retests the structure here. Then from that, it breaks the structure. It because you could see that you have a high. Oh, so something was wrong, guys. Something was wrong, because you see now everything that I was doing is just coming through, right? Let's do it like this. Let's delete this. This is the error that I was making. This is the error that I was making to say the market was actually extremely bullish. Not extremely bullish, but the market was just very much bullish, because you could see that from this time up until 2020, when COVID started affecting the markets very badly, you could see that the market was just extreme. It was like tilted towards the highs, right? So the market kept on pushing towards the high price. Keep the euro to the OD kept increasing in value, kept increasing in value, kept increasing. Then it increased immensely, right? Until you have price now kind of being pushed down. And I think these are post-COVID effects where the economy has been affected. These are some of the inflations and some of the exportations and importation prices, GDP and everything, man, CPIs and everything and even the banks and how they trade and some of the policies that had to be revisited, because of how the market is looking at the time. But I want us to just delve in here, right? Because of I'm still speaking so much about structure, right? So if we can delve in here, so the market created its lower high, then it went and it created a lower low, right? So I'm a person who trades candlesticks, I'm a person who trades patterns, I'm a person who trades structure. So I'm a pure price action trader, right? I do use indicators, but when I'm using indicators, these are only the indicators that I use. So I use the exponential moving average. This is the 50 EMA. Then I have the mother of all moving averages, right? But you can use a simple moving average. You don't have to use an exponential moving average. You can use a simple moving average, or you can use an exponential moving average. It is up to you. It is what you are comfortable with. And actually, guys, the other thing that we must know about moving averages is that moving averages help us understand our lows and highs and support and resistance, where the market is resisting. So if you are using trend lines, right? If you are using trend lines and you actually understand how to use a trend line, how to draw a trend line, what is a substantiable trend line? What is a tentative trend line? And if you know all these things, then I do not see the need of you also having to use indicators, because of what will happen is that you end up having a chart like this, right? You have a moving average, you have another moving average, you have trend lines, you have all these things. Some people will even use the MACDs. Some people they'll even use robots on top of everything. Robot. Or you know what I mean? So it becomes a very complicated chart. And with charts that are very complicated and not simplified, people don't actually see the triggers and spot the available areas where to buy and sell, or the supply, or key areas where you're starting to see so many confluences occurring, right? So guys, yes, I want to finish the whole point that I was making. So the market came back to break structure. As you could see that the market came and retested this previous higher low, lower high here. And what it did, it broke it. So a lot of people who like myself, right? I was anticipating somewhere here, right, somewhere here, that the market will push and create a double bottom before it shoots up. I normally trade like that, but what I also see is structure itself can kind of allude to say this is what the market is doing. If the market is shifting in direction or momentum, what you'll see the market actually breaking its own structure. So if you are a person that pays attention to structure the most, you will see that the break of structure also will allude that the market is actually changing direction. From that, the market can correct again to gain the momentum that it needs for it to go into the internet direction, right? So at the current market position, at the current market point, we can see that the market is actually very bearish, right? But we can see that the market is also now correcting and pushing towards the buys, right? Which is a bullish market, right? So what we see here is that the market has been bearish and actually respecting structure and respecting my trend lines. This is a weekly channel, guys. As you can see here, that the market did respect this area, and I'm expecting the market to actually respect this area, maybe break this area. After breaking this area, we can actually maybe break this area. After breaking this area, we can expect the market to retest, then continue towards the buys, because of, if you see where the market was somewhere in 2017, these were some of the prices that the market did reach. These were some of the points that the market did reach prior to COVID-19 and everything that happened. So the market has had a tendency just to buy, right? So now, what am I doing now? Right. So now what I'm anticipating the market do is exactly that, right? And break of structure or break of my trend line. Because of the other thing to note, guys, is like a trend line is it helps you analyze the market better, right? The trend line, what it doesn't do, it doesn't assist you to either say that that particular area is the area where the market is gonna go and turn or go and break a structure. So you actually anticipate the market to kind of get into certain levels. From that level, you can anticipate the market to kind of break structure or continue. So you can expect a continuation or a retracement, right, or a consolidation, because some markets get into a certain area, and what you'll see is you will see a lot of rejection, right? Hence I said that I read candlesticks. I read candles, right? From the open, the close, the momentum of the candle, the pressure, meaning the volume, how much involved, how impactful was the market in that kind of psychological key level, what was happening, right? So now, as I break it down further, guys, I could see that the market has kind of reached a higher a point. I even noted it here in 155 as a higher point, and somewhere beneath it, it was very much it's not a major support level, but it's a level that the market has respected. And you could see here that the market has actually had a tendency to respect structure. Hence you see here you have a higher high here, you have another higher high here, you have a higher low here, you have another higher low here. So we can be anticipating the market to kind of continue and create a higher high, or the market kind of reverse. But for the market to reverse now, we need the market to kind of break the structure. So what we need the market to do at the current market position is that the market will reverse, right, break structure, right, come back, right, and continue, right? So we can be expecting the market to do things of that nature, because of the market can only break structure using those. But what I'm seeing, guys, what I'm seeing looming here is that a double top can occur, and then the market can push towards the down. So what I'm anticipating the market do is the market will get here, and when the market does get to that key area, I'm going to be selling, right? Because of why, right? And this is my reason and reason alone, right? This is my reason and reason alone. But make sure that you when you enter the market, that actually you look at my chart now. Look at how big it is, right? Okay. Let's go back to the 4 hour. Let's go back to the daily. I want to close something here, guys. I want to close something here. When I close something here. For me, it's important to have a stop loss, guys. Right? It's important to have a stop loss. This whole thing of funding. Some people just love to fund accounts. I don't know why. I'm not a Nasdaq trader, so me, I operate with a stop loss. Right? I trade like a beginner, even though I've been trading for quite some time now. Right? So what I'm expecting the market to do is kind of give me a lot of rejection in this area for me to kind of put a lot of sell stops or sell orders in this kind of area here. Then from that, I will take my profit somewhere in this level or somewhere in this level. Somewhere in this level, I'll lock profits, because if I think I would have reached about 100 pips, let's lock this and use the ruler, right? Use the ruler, so it will be 114, and this will be 259, right? So why? Because of, in as much as I'm expecting the market to continue being bullish, right? But the market is like a breeding organism, right? This is what somebody who used to I used to follow very, very close, Dr. Martin used to say the market is like a living organism. It breathes, right? So the market won't just push. It has to come back. The only thing that worries me is that, as you could see here, that I have a trend line. So if the market does break my trend line, I am expecting further sales, but I can be expecting a continuation because of the market has broken structure. But now, another thing to note is that because of this is only a 4 hour diagonal support and diagonal resistant trend line, which equates into a channel, right, inside a channel. So if it breaks it, it doesn't mean that the market cannot also come back and retest and break it further. You have a market that can move like this, right? You have a market that can move like this. You have a market that will do this, break structure, come back, come here, and boom. You cannot say that the market doesn't do this, because the market does whatever it wants, right? So what we can be notified of is that the market can kind of give the confluences that we need, kind of come back and retest this area here, which is a highest point that the market has reached, the 1,55, right? Then now give us the sales that we're looking for to gain the momentum and kind of go down and revive the buyers. Somewhere here I'll look my profits, right? And I'm telling you guys this because of I believe that this is actually a higher probability sell, right? So if the market does kind of push to this area, I'm expecting the market to kind of give me the confluences, and for me to actually enter the market with so much confidence, right? But should the market not do that and the market actually breaks this previous structural high that it reached and continue towards the upside, it's fine, fantastic. I'm just gonna expect a retest and buy the market, right? So I won't go against the trend. I won't go against the trend. The trend is my friend. I follow the trend. This is the number one rule of actually trading FX pairs or forex or just any financial market or financial market instrument, right? Is for you to actually follow the trend. But if you look at the line graph, right? If you look at the line graph, you could see that there is not so much momentum from this area here, okay? Because what we're looking at post this is the weeks, right? The weeks. So the market is closing somewhere here. So the market is failing to actually break this area here, right? Because of what we're looking at the weeks. So this is another high area. So if the market will keep rejecting, what do you think a guy like me is supposed to do? I mean, I have a stop loss. If the market is not going into my direction, I have a stop loss, to stop me from losing more funds, losing my equity, and ultimately blowing my accounts. Right. So, and another thing, I wouldn't open big positions unless I'm comfortable, right? But I'm telling you, this is a higher probability a trade towards the bearish, right? For now, because of I'm expecting the market to kind of retrace, gain enough momentum in this area here in 154, somewhere here in 154, it will reach this area. We can also anticipate things like stop hands and stuff like that. You know what I mean? And trap and even further convince other people to swing further, and the market can reverse. But somewhere here lock profits, somewhere here lock profits, um and just watch it run. So if it runs further, good, we're making more money. If not, then we're anticipating that the market will actually reverse somewhere in this area. So boys and girls, guys, thank you so much for tuning in. Thank you so much for the subscription or actually viewing my content. Thank you so much for the support that you guys are showing me. Please do click the like, click the notification, and click the comment, and actually do comment and say, James, please analyze this, because of I'm actually trading that pair, and see if, as long as it's not an indice. I'm not trading indices. I don't trade Nasdaq, I don't trade German 30, I don't trade US 30. I don't trade those guys. I don't trade those things. I believe that the people who trade those have so much confidence in themselves, and I do too, but I choose not to. So much stress, right? So for now, guys, bye.